So your thoughts on the free fall? People are pointing to global factors being at play right now.
The sense I get looking at it is twofold. Of course, you have the elections, the impending elections being a factor weighing on investors who would like to just kind of wait on the sidelines and see what happens going forward.
But it's more than just waiting on the sideline. We're actually seeing selling.
Well, yes. I mean, selling in terms of waiting on the sideline in terms of holding on to their cash and holding fixed positions ahead of the elections and maybe looking to re-enter after there's some clarity going forward. But I think to a greater extent, what's happening in Nigeria is consistent with what's happening in other frontier markets. For instance, if you look at other African frontier markets in the form of Kenya and even Tunisia, I mean, Egypt is still closed, but we've seen significant declines in those markets since the beginning of the year. As a matter of fact, Nigeria was the single market that was sort of bucking that trend going into late January. But after the events in Egypt on January 25th, which led to the ultimate dissolution of their government, we've seen the market sort of readjust and move in line with global markets. The sense we get is that foreign investors and institutional managers globally are just reducing exposure to frontier markets and non-core markets, also in view of the things that are going on in places like Japan, and just looking to a bit of a flight to safety. We've seen equities sell off even in developed markets over the last week, even though we're getting a bit of a support today. But the general sense is that there's an increased risk aversion among portfolio managers globally, and we're just seeing that trend play out in Nigeria.
What about institutional investors here? One gets the sense that they are not as active as one would anticipate, more so the PFAs. Is this a case of them being fully invested in equities or just risk aversion as well?
I think it's also a situation where the PFAs themselves are risk averse, obviously looking to wait for the elections to play out and some of the larger macro factors to sort of play out before they take long-term positions. It's obviously a situation where you don't want to walk onto a falling knife, so to speak. The markets are declining, but you also have to remember that institutional investors only account for about, local investors only account for about 28% of our market, 28 to 35% of our market activity since the beginning of the year. Foreign institutionals have done about 68%. So they're the ones who really drive the market and dictate the pace right now. And what we're seeing is a situation where the sell-off has intensified and doesn't seem to be pulling back any bit.
And now the NSE is down 1.4% for the year. Yeah. Obviously, that should present some buying opportunities, don't you think?
Well, obviously, I think if you have a long-term perspective on this market and you believe in the fundamental growth story of Nigeria, the attractive demographics, and strong GDP potential, you should be buying into this market at this time. It presents attractive valuations across the board, and I think it's a good time to be looking to buy. However, you have to be cautious once again not to walk into a falling knife. Onto a falling knife.
So any specifics? Which counters look quite attractive to you right now?
As it is right now, on a fundamental basis, we're looking at financials primarily, and we're looking at some other non-financials. Specifically in the financial space, we're looking at First Bank. We think it offers a very attractive valuation at a current price below 14 naira. We're looking at a price to earnings current PE of about 10, and with its strong asset base, with its significant exposure to the interbank market, it should benefit from rising interest rates. We also like the fact that even with its huge asset base, we have seen, and loan portfolio, we've seen very, very limited provisions on that bank. So we think First Bank is very well run and it offers a very attractive valuation. In the non-financial space, we'd be looking at WAPCO and Nestle. Nestle is an interesting one because they've just opened up the 12 billion naira Shagamu plant, and this was just evident in their numbers this year, which came in slightly above our own expectations. We expect the company to benefit significantly from backward integration and some of its arrangements with local agricultural farmers to sort of hedge it from growing prices of commodities globally, even as it taps into strong demographic trends in Nigeria. So that's another pick. And WAPCO really is a story of expansion. We expected Shagamu expansion of about 2 million metric tons to come on stream later on this year. They've been able to sort of control their costs by using LPFO and gas. Gas is their preferred energy source right now, so that's been able to keep prices manageable. And we just think specifically for WAPCO, it has an attractive valuation right now.
But on WAPCO, you're not too concerned about the rising diesel prices in Nigeria and the scarcity that we've seen for that. Obviously, energy is a major issue for cement producers.
Yeah. Specifically with WAPCO, the unique advantage it has in terms of diesel prices is that it doesn't have to ship or transport its produce very far, its products very far to get to its markets. Specifically, the Lagos area is WAPCO's dominant market, and some parts of Western Nigeria. So being located in Ewekoro, which is just outside of Lagos, is a significant advantage for them, as opposed to some of their other competitors who have to significantly transport their goods.